There's a brand new tax deduction in 2026 that could save gig workers and freelancers up to $25,000 in federal income taxes. And most people have no idea they qualify. In the next 8 minutes, I'll explain the new no tax on tips deduction, who qualifies, how much you can save, and exactly how to claim it on your tax return. Note: this information applies to US-based workers. Welcome to the Freelancer's Wealth Blueprint. Let's break down this new deduction. Under the One Big Beautiful Bill Act, signed into law in 2025, workers who receive tips can now deduct up to $25,000 in qualified tip income from their federal taxable income. This is not a credit. It's a deduction that reduces the income you pay federal income tax on. This applies for tax years 2025 through 2028. So you can claim it right now on the return you're filing this tax season. Let's start with who qualifies. The Treasury Department published a list of 68 occupations across 8 categories. If your job falls into one of these categories, your tips qualify. Category 1, Foods and Beverage Service. This includes bartenders, waitstaff, food servers, cooks, fast food workers, host staff, and dining room attendants. Category 2, Entertainment and Events. Gambling dealers, musicians, DJs, entertainers, performers, and here's a big one: digital content creators. If you earn tips as a creator, you may qualify. Category 3, Hospitality and Guest Services. Bellhops, concierges, hotel desk clerks, and housekeeping cleaners. Category 4, Home Services. Home maintenance workers, landscapers, electricians, plumbers, HVAC mechanics, cleaning service workers, and locksmiths. Category 5, Personal Services. Personal care workers, event planners, photographers, videographers, pet caretakers, tutors, and nannies. Category 6, Personal Appearance and Wellness. Barbers, hairdressers, massage therapists, skincare specialists, manicurists, makeup artists, exercise trainers, and tattoo artists. Category 7, Recreation and Instruction. Golf caddies, tour guides, sports instructors, and self-enrichment teachers. Category 8, Transportation and Delivery. And this is the big one for gig workers. Taxi and rideshare drivers, shuttle drivers, delivery people, parking attendants, and home movers. That means if you drive for Uber, Lyft, DoorDash, Grubhub, Instacart, Amazon Flex, or any delivery platform and you receive tips, you likely qualify for this deduction. Now let's talk about the rules. Rule number 1, only voluntary tips qualify. Tips that customers choose to give you count. Mandatory service charges added to a bill do not count. For delivery and rideshare drivers, the tips customers add in the app are voluntary. Those qualify. Rule number 2, there's an income limit. The deduction phases out for single filers with modified adjusted gross income above $150,000 and for married filing jointly above $300,000. Rule number 3, the deduction cannot exceed your net income from the business where you earned the tips. If your DoorDash net profit after expenses is $18,000, your tip deduction is capped at $18,000, even if you earned more than $25,000 in tips. Rule number 4, you still owe self-employment tax on your tips. This is critical. The no tax on tips deduction only reduces your federal income tax. You still pay the 15.3% self-employment tax on all your net earnings, including tips. Rule number 5, workers in specified service trades or businesses are excluded. If you work in healthcare, performing arts, or athletics as defined by the IRS, your tips don't qualify for this deduction. However, most gig workers and freelancers are not in these excluded categories. How much can you actually save? Let's say you're a DoorDash driver. Your total earnings were $45,000, and $15,000 of that was customer tips. Without the deduction, you'd pay federal income tax on your full net profit. With the deduction, you subtract $15,000 in qualified tips from your taxable income. If you're in the 22% tax bracket, that's a savings of $300 in federal income tax. The maximum deduction is $25,000. At a 22% bracket, that's up to $5,500 in federal tax savings. Remember, you still pay self-employment tax on the full amount, but the income tax savings alone are significant. How do you claim this deduction? For the 2025 tax year, which you're filing right now, here's what to do. If you're self-employed, report all your income, including tips on Schedule C as usual. Then claim the tip deduction to reduce your federal taxable income. Check your earnings statements from your gig platforms. Many platforms like DoorDash, Uber, and Grubhub break out tip income separately. You need to know exactly how much of your income was tips. For the 2026 tax year and beyond, reporting gets easier. Platforms will be required to separately report tip income on 1099 forms using a new Treasury tipped occupation code. This will make it clearer exactly how much of your income qualifies. Keep records of your tip income. If your platform doesn't break it out clearly, track it yourself throughout the year. Let me give you a real example. Maria drives for Uber and delivers for DoorDash. Her 2025 numbers: total Uber earnings, $30,000. Tips from riders, $6,000. Total DoorDash earnings, $20,000. Tips from customers, $10,000. Combined tips, $16,000. After all her deductions on Schedule C, mileage, phone, and other expenses, her net profit is $28,000. Without the tip deduction, Maria pays federal income tax on $28,000. With the tip deduction, she subtracts $16,000 in qualified tips. Her taxable income drops to $12,000. At the 12% bracket, that's roughly $120 in federal income tax savings. She still pays self-employment tax on $28,000, but the income tax savings go straight into her pocket. A few important things to remember. This deduction is temporary. It runs from 2025 through 2028. Take advantage of it while it lasts. It only applies to federal income tax. Your state may or may not offer a similar deduction. Check your state tax rules. Track your tips carefully. The IRS will expect you to substantiate the amount you're deducting. Platform earnings reports are your best documentation. If you earn tips in multiple gig jobs, you can combine them. The total deduction across all qualifying jobs is still capped at $25,000. And finally, this does not change your self-employment tax obligation. You still owe 15.3% on all net earnings. Here's the bottom line. If you're a gig worker, freelancer, or anyone in one of the 68 qualifying occupations who receives tips, you have a brand new deduction that could save you thousands in federal income taxes. Check your platform earnings, identify your tip income, and claim this deduction on your return. For more on gig worker taxes and deductions, check out our platform-specific guides. Links in the description. This video is for educational purposes only and does not constitute tax or financial advice. Consult a qualified professional for your specific situation. See you in the next one.